Welcome back to our special coverage of the medium-term budget policy statement, which has just taken place and delivered by the Finance Minister Pravin Gordhan in Parliament. Now, interestingly, as we take a look at the social media feeds as well as news headlines, it does appear as though before actually making his way into Parliament, the Minister walked by. There were protesting students outside Parliament, greeted them, acknowledged their presence before delivering the speech, and even walking through Parliament, also received a standing ovation as he entered and left the building. So overall, seems as though he's sticking to the initial plan with regard to fiscal consolidation, looking at alternatives and options to increase the economic growth stimulus in the country, and of course the tax base. But let's get further analysis on this now from our experts who join us in studio to break down the figures and of course what it means for our economy, business, the private sector and ordinary workers here in the South African economy. We're joined in studio by Muneer Hassan, who's a senior lecturer in taxation at the University of Johannesburg, and Lesiba, who's from Investment Solutions, chief economist at that institution. Gentlemen, thank you so much for your time today and for joining us. We were all watching the speech here at the JSC, and I think clearly you can tell the minister is a very confident man. He, despite all of the concerns that are currently taking place and the fact that he might have to appear in court next week, still very confident, Lesiba.
Not easy. Indeed. So what we have seen the minister do is continue the path that we've gotten accustomed to around South Africa and its budgetary process. He has confirmed that SA continue on a path of fiscal discipline. He had noted all the top-of-mind issues that are concerns to investors, including debt levels. He has conceded that growth will not be as strong, so revenue collections is going to be lower. He has listened to the fees must fall campaign in a particular way. Now spending on tertiary education will be the second fastest growing after debt servicing costs, sure. which is quite a notable expression. In it, he's not detailing that it's going to be free. He's just saying that there is much contribution that's been made from the fiscus to that end. And I do think that he also took heart from that view that came out from the global publication that said South Africa is one of the best debt management country or institutions, the National Treasury in Sub-Saharan Africa. Along with what the World Bank had said, that fiscal policy shows resilience in how it's been managed and it could weather any storms that should arise. I think with those two institutions airing views to that end, confirmed with what has been delivered here, SA remains on that path of prudent fiscal policy, and I don't think we're off the rails.
I want us to delve on the debt issue for just a little bit longer and focus on that, given the headlines and the institutions that you say have made representations here. I'm slightly concerned, Lesiba, because if you look at our debt to GDP ratio, it was initially sitting at 45.8 for 2016, and I understand the figure could increase to 47.9 for 2019 and 2020.
Right.
Debt consolidation, we on the right track? Are we really, when these are the figures that we deal with?
It is what is expected in the 3 years from where we said that one needs to look at. In a gross figure, which was about 53% of GDP, what we found is that too is expected to decline going forward. Yes, there's been some increase in they've issued debt in foreign denominated currency. They are taking advantage of lower funding costs, surprisingly, despite all the machinations and stress that has been in the country. Debt levels are rising, but we need to just compare these things to get a better perspective of those numbers that we're talking about. If you to look at countries like India, they've got even a higher debt to GDP ratio. We're talking more than 60%. Notwithstanding that, in Brazil, which is around 66%, even Turkey shows higher stocks of debt that has been accumulated. While there's an increase, but forecast to decline, with the gross number changed little, which I took heart on. Yes, the net number has increased, but the gross number remained largely unchanged. From that relative analysis, with GDP also in the medium term expected to go up closer to 2%. 2019, I think that's we were seeing a number more than 2% from here. It looks like it's sustainable at this point, because debt is all about whether it's sustainable or not. on the one hand, and also whether it's been accumulated for consumption purposes. Consumption here being anything that is wasteful, on guarantees on state-owned enterprises, or even on luxurious lifestyle from those that are in public service. And what we begin to see now is even with the headcount actually has plateaued from the statistics that have been released here, both from national and provincial. Although the growth in wages, which is agreed for a multi-year, is higher, it continues at 7% because it's been agreed. I think we're in the second year of that 7%. But the stock or the head count of the people behind that growth seems to have plateaued. I think that's encouraging. It would have been an adverse outcome. So if we looked and we found that the head count has increased, which is not what we find in this budget.
Exactly. To keep with that theme and to come to you, Muneer, just to get your views, I understand austerity measures there, as you've alluded to, implemented back in 2013, have resulted in just over 7% in government spending. Still a very strict tone when it comes to the head count within the government institutions, that those who leave for retirement or other purposes, their positions will not be replaced. So if we look back in hindsight, overall, are we fairly impressed with what the minister and his department have been able to do?
I think, just coming back to the point about him being extremely focused from what I see in delivering the budget, despite what was happening within the surroundings and within the circumstances around him. So I think he's quite focused in that sense. I also think that we see gone are the days that from a tax point of view that you can actually ignore the medium-term budget policy statements. There was a time where from a tax point of view we just overlooked it, to be honest, because we didn't get a lot of insights into policy direction, into where they actually want to go. But over the past few years we've certainly seen, and even in today's statement we see a lot of policy statements coming out, giving us insights into where the expenditure is going to be going, where the income is going to be coming from, and particularly from a policy point of view, where do they want to drive the tax collections.
Let's talk about that, because he did allude to the sugar tax, those consultations still taking place. Nothing on wealth tax and nothing on VAT, which are always the contentious topics that we brought up even before this conversation. But your take on the elements that he's alluded to and the likelihood of even more tax disclosures coming through in February next year.
I think just to talk maybe about the sugar tax initially. So I think there's two takes on sugar tax. The one is that obviously we want to actually drive behavioral change, and in doing so we tax people, which will then change behavior, spending patterns and that kind of a thing. But the other take is that are we actually doing it to then fill a pot? You know, we need collections, we need money as well. We need to fund the education commitments that we're actually coming out from this budget as well. So I think there's two possibilities, and I hope it's not that we're actually just collecting or introducing another tax for the sake of it. I think if it's all well and good within the context of changing behavior, then that's fine. Then that's from a policy point of view, we've seen taxes introduced to change behavior. In terms of wealth taxes, I think it's not totally off the card if the minister didn't say it. I think the David's Tax Committee are still talking about it. They're still doing their investigations into whether it's viable. But whether wealth tax, having said that, is that we've already got two wealth taxes in the tax system. We've got donation tax, which is almost like a voluntary tax, because you've got to walk into SARS and actually tell them you're making a donation. And then we've got a very complex estate duty. The calculations that go behind that is quite detailed, and it needs a lot of administrative staff and support from SARS' side in terms of doing the maths and the calculation. So we already have two wealth taxes built into the system. If we talk of a third wealth tax, that will it may overcomplicate things, and it all depends in terms of how it is introduced. If it is introduced in a simplified manner, then it can be palatable. But if it's again complicated and complex in nature, I don't think it's going to be that easy to implement.
And we'd be worried about capital flight there, because these are probably key individuals who have substantial investments in the South African economy, who might pack up their bags and leave.
Although it's a global phenomenon, right? Even now in America, both candidates, well, not so much Trump, but the other, are
we know how he feels about taxes.
Exactly. They're talking about higher taxes, especially for those that are wealthy. You look at all of Europe, there seems to be that trend. But I am dismayed that we have resigned ourselves in a fiscal policy construct to higher taxes. Does not support growth. What's lacking here, while it's a wonderful budget, and I think under the constraints the minister has done a good job, because we needed to confirm that there's no change in the last 20 years. But what has been lacking in the last 20 years is a shift to a more higher plateau of growth within the policy framework. It's a 20-year outcome, it's not specific to this particular one, but I'm dismayed that we're not seeing that come through, because we cannot continue on this path. It's not sufficient to celebrate growth that is merely above 1%. With these numbers of debt levels that are going up, technically speaking, when you do a relative comparison, you can say this is not too bad, but it's not great. And we have needs that are increasing, and they require a concerted effort to lift up potential growth. We cannot be looking at the one side of the outcome, which is that which has come in. How do we navigate that?
Yes.
We need to be able to looking at what can we generate new, and that's what's missing here.
On the topic of growth as well as GDP, the tax to GDP ratio is a critical element that you've also alluded to here, Muneer. How are we faring in that regard, and are we close to that edge, as Lesiba has alluded to?
So I think the last commission was the CATS commission, and there's no mathematical solution to this. I think they mentioned that the correct tax to GDP ratio should be somewhere about 26%. Now, the last numbers that I seen about a year or so ago, we were sitting just slightly above that. What a continuous increase in taxes, and if we continue to persevere and push those kind of things, obviously that becomes a tipping point. And at that level, if we're talking about things like wealth taxes, that could actually push that tipping point way beyond. And that's the level where people start to do the comparisons, where if I were to be not so far in Mauritius, just not far from here, the tax rate over there is 15%, whereas we pay a 28% tax company tax rate. So then what happens is people start to do the maths, wealthy individuals start to do the maths as well and say, where is it better to actually be? But having said that, it is an international issue where taxes are going to rise wherever you go.
Unfortunately, we're still struggling with our shortfall. 23 billion, I understand, is the figure, and the trick there is to actually manage it, that it doesn't increase in the future, right? Are there potential plans that you see the government trying to implement to navigate this particular challenge?
I think the solution from a tax base, and I don't think we should be looking to introduce new taxes. I think we should rather be concentrating in terms of broadening the tax base. So getting more people into the systems, and I think there's a lot of untapped scope for that. So SARS would have to be more aggressive in terms of policing. Yes, we've seen they're becoming quite aggressive when it comes to international structures like your base erosion and profit shifting, sharing of information, getting more intelligence into trying to unpack the puzzles. But I think that the solution is not let's introduce more and more taxes. Let's get more people into the system and paying their fair share.
Let's talk about growth. You both mentioned increasing the pie and ensuring that we build up on that base. Initially in February, the minister alluded to 0.9% growth expectation for 2016. That's been revised to 0.5%. 2017, 1.7% GDP growth and 2% in 2018. I don't know about you, but I'm not impressed with these figures, but I understand that we're coming from a significantly challenging background. And if you were any one of the ratings agencies who have mentioned that they're worried about growth in South Africa, would you be disappointed by these figures too?
They're in line with what they would expect, and what is heartening about these is that it's not showing a declining outcome. Because where we are now, domestic demand, it's actually weakening further. We see it in retail sales, we see it in new vehicle sales, we see it in consumer and business confidence. The internal economy is weakening. We've been saved by the external factors. Those exports growth, that's what's underpinning that move towards 2% in the medium term, is this expected rent depreciation that has happened previously on a trade-weighted basis. It's potentially going to sustain higher export growth. We hope it will. But there seems to be demand in sub-Saharan Africa for exports from South Africa. The Chinese slowdown seems to have found a bottom around 6.5%, which helps. With all these, all the external factors that are assisting the economy, but internally, where potential growth needs to be a focus, and it needs to be seen within the outcome here. When rating agencies look, that's why they will lament. I'm not seeing enough economic reforms. There are no details on how you're going to come out of this low growth rut. Admittedly, elsewhere in the world, the focus is on fiscal policy, actually. If you look at what's happening globally, it's a debate elsewhere, with the OECD leading the charge, talking about you got to stimulate the economy, borrow, and just make sure that you spend on infrastructure spending. We see it done in Canada. We see it done in Japan in a big way, stimulus. With this election in the US, I think we're even on the other side. We're talking about fiscal policy leading the charge of the 08 recovery since then. Now that said, for SA, what's lacking is how are we going to come out of this rut? It looks like a rut. When a hole, it's between 0.5 and 1.5. At base is 2. We just oscillating between those two figures. We need something that lifts us out. And that's what's lacking here. It's a different conversation. And admittedly, when the environment is not conducive to changing the status quo that has been there for the last, 2 decades, what needs to happen is we've got to change the narrative from the top, to make sure that we don't end up in this rut indefinitely, which we're risking.
I want to ask a very unfair question, but given that the minister within finance as well as other departments have all these independent plans, a 9-point plan, we mentioned SMMEs very briefly, ESCOM as well as some projects regarding infrastructure. These policies, as he's alluded to, are reliant on economic growth. And if these policies aren't implemented, that economic growth is not going to happen.
Correct.
We're looking towards the 2019 election. We know that there are divisions within the ruling party. Would you be concerned as to whether or not these policies will be implemented and again run the risk of actually South Africa not reaching these GDP targets in future?
I think, it's also linked back to a low growth rate or revising our growth rates down. What it's going to do is going to impact tax collection. So it's a vicious little cycle. So if your growth rate is going to be low, companies are going to produce less profits, which means less taxation. I think in terms of the divide, in terms of where we are, what they can touch and where they can go, it's so sensitive at the moment. Because if we look at the pot, the tax collection pot, it's the individual, and it's individual again. So you pay salary when you pay taxes on your monthly salary, and then you go and consume. You pay VAT, that's the second biggest collection pot. And it's so sensitive because they can't go there. They can't actually touch the VAT, because if they do, that will in turn stifle growth rates, which will lead to lower tax collections. So we're in such a difficult position. But if we actually look at the numbers, I think he's not been over optimistic, because it's useless putting out big numbers and then we can't actually achieve it and then revise the forecast downward. I think he's trying to be quite optimistic and say, where are we, what can we achieve, and let's work toward those numbers.
Is it sustainable? Is it doable? I guess that's the trick question, because we have all these plans in place, but however, implementation is always where we tend to fall short.
Right. So for our country, what normally happens is, because we're small and open, we do benefit from fortunes from elsewhere. If it's China or Sub-Saharan Africa, or even in Europe, or even in the US, if the world is not showing significant growth constraints, we somehow muddle through. And that's what we see here. We're just muddling through, which is not enough, because the needs, the demands of the economy require a lot more growth than just to muddle through. And that's why it's unfortunate when our mind and our thinking space is not freed up to focus just on that. We are bogged down by other detail, which is unnecessary.
Exactly. I want to focus on another element, and we had the figures up on screen. Inflation expected to rise to 6.4% for 2016, 6.1 in 2017, and 5.9 in 2018. We know South Africa is a consumption-led economy, as you alluded to. Again, this raises the question, what does this mean for the SARB? Could we see that other rate hike come through, especially given the fact that all eyes are on the Fed, and we know 25 basis points is coming in December? Do we want to be yet another step ahead?
You know what? I'm surprised with those inflation forecasts. Admittedly, the National Treasury has come out and they've consulted with the Bureau of Economic Research at the University of Stellenbosch, and they, from Stellenbosch, confirm that the forecasts that are performed by the National Treasury are in line with those from elsewhere, including supranational and that in the private sector. But that inflation view is a little more hawkish to my understanding, because if you look in the last 4 accounts of inflation, it continuously surprises on the downside. In other words, there's an upside surprise on inflation. It's been driven by cost push factors. It's largely been around rain and droughts and all that. There isn't domestic demand, as we were talking. I do get a feeling that those numbers are more exaggerated and more conservative on the inflation outcome. I'll have it more improved than that, actually. I will not be surprised mid-year next year to find inflation that is below 5%.
Even with an increase in the oil Brent crude price and perhaps a significantly volatile South African rand?
See, all those are interesting. Oil, it is a concern. If it ratchets up to 50, 55, 60, it becomes problematic. But from the futures market, what we see is 53, 55 maybe at best. So that may have a contribution. However, on the rand, the throughput of grand weakness has seemingly weakened even over a long time. The SARB continuously look for feed-through second round effects, and they don't find from the rand weakness. And that is why I believe that the SARB, as they began talking, that we may have reached the peak of a rate hiking cycle, they've come out and said the bar for reducing rates is quite high, which is a code name of saying we're likely just keep it flat for some time and wait for those base effects, which will arrive as soon as next year. Those base effects, because you're starting on a higher base. The rain and all that is helping. I do think that we shouldn't expect any rate hikes. That inflation number is too high from the National Treasury.
Too high from your analysis. Let's get on to the big issue of the day. I saw a couple of tweets, some suggesting that perhaps students were the winners in this regard, but mentioning a increase with regard to the transfers to NSFAS, as well as additional funding of 17.6 billion rand for post-education and training, and some assistance for those in the missing middle who have an income of below 600,000 rand, if I'm not mistaken, when it comes to per annum. Did the students actually get what they want here? And secondly, is this proposal sustainable?
I think he's listening to the issues. I think he's saying that yes, we hear in where you come from. You're looking for free education. It's not yet viable, and it's certainly not coming through the budget that he announced over here. But what he's doing is he's saying there are 2 potential solutions are put on the table before this budget. The one is any persons below about 120,000, we can fund that. And secondly, we talk of the missing middle. So anything between 120 to 600,000, a family earning anything below that, we can look at loan funding, and that will basically be funded through NSFAS. So I think what he's doing is he's recommitting to the 2 solutions that was already put on the table before we've seen this medium-term budget. Did the students get what they want to? No, because they're fighting for free education in its entirety, and until we don't come to some kind of engagement and sort of, we are at an impasse. You know, they are at the one end, and we can see the government is sort of getting nearer, but not quite there. And it is possible that, you know, if we actually look at the economy at the stage, is that we probably cannot afford free education.
Yeah. So recently I've done some calculations to work out what could happen if free education was to be introduced. Right now, the percentage of non-interest expenditure spend on education is 5.5% in the latest number now, 5.5%. So if they were to assume these revenue earned numbers that we've seen yesterday from Stats SA around higher education, if that number of revenue earned, which is largely tuition, which is about 100 billion rands, was assumed by the fiscus, along with these commitments that have been put out, we will double, more than double the expenditure on the fiscus. So it will move from 5.5% to say 14%, which will be closer to what we spend on defense and safety and courts, etc. That number is around 14%. The fastest growing, well, the largest component of expenditure is actually on primary education. So this will bring it right next to that outcome, which will mean you need huge reallocation from all these important functions in society if you were to sustain. This is only around for the next 3 years, right? Just in the medium term, which is consistent to what we're talking about in the budget. In a nutshell, you will double the amount that has been spent in the next 3 years to about 14% of total expenditure. Notwithstanding, if you were to actually forecast it going forward, it will increase. It will just be an exponential increase, which is totally unsustainable. So from this discussion, and here we were just modeling tuition, which these amounts are only talking about. What students are requiring or striking about is free education, which is tuition fees, residence fees, and books. The latter are more variable, hey, to inflation, to currency moves. If you were to plan having that in mind, it would prove very problematic. So just on tuition alone, this can be quite an expensive, unsustainable process if we were to undertake it.
To add to that, and let's assume we actually do that. The question then is, are we actually taking a long-term view on this? Because if we get to a model where we do have free education, going forward, would that free education actually be sustainable into the future? But more importantly, will that not also create a two-tier system in the education model and teaching system? So what I mean there is that you'll have a government education university and you'll get your private educations coming out. And what it could then do is it could dilute the quality of education that's coming through on the government side.
Sure. So the unforeseen consequences as well here need to be taken into account with regard to how we implement this going forward. We have about 2 minutes before we wrap up, and in closing, I want to get your views on the elements that the Finance Minister did not mention, which you think were quite critical, and secondly, how you would respond to this if you were representative of the ratings agencies. Muneer?
I think the one issue that did not come out clearly is, yes, from a tax point of view, we did see comments on carbon taxes and sugar taxes, and I guess those are issues that we did see beforehand. But what I did not see, he mentioned 43 extra billion rands in the next 2 years. But what we don't see is the detail in terms of where is that tax collections going to come from. So for me, I think that's sort of missing in the budget.
If you were S&P or Moody's?
Moody's, I think it was a fairly stable budget. So if our S&P on the other side, I would look at it and say fairly predictable in a consolidation budget.
So perhaps push out that downgrade for a little bit later next year. Or fingers crossed that it actually doesn't happen.
Yes.
See, it seems like I'm spelling a disaster for our economy. Your closing response with regards to what wasn't mentioned and your view on a potential downgrade.
The minister has really done the best that can be done within this construct. What I've taken heart of is, one, we are not off the rails. South Africa does not look very different from what we're gotten used to, because that was a risk, that we wake up and we find that fiscal management has changed, but we're on the same course as we've been 20 years ago. However, we are short on these economic reforms, and we're short on growth. And we have added more commitments in terms of students and other needs that will arise as we continue. There was no particular mention on how the electricity production is going to continue, whether there's a need for additional expenditure I know contingent liabilities was seen as a vulnerability in the budget. I wonder what that meant. Does it mean that the potential loans that are coming out of China will be guaranteed from the state for Eskom? That needs to be clarified. It's not really clear how that's going to happen. So with all that, there's still fiscal headwinds. However, from a rating agency's perspective, there's not material change from where we have been in February. There are things that are committed here that continues to make sure that South Africa is well on a fiscal management that makes sense under the constraints. A local currency rating downgrade may happen from Standard & Poor's. I'll be surprised if Fitch does anything now that they've got both local and foreign ratings similar. I wouldn't be talking about a junk status as yet.
Fingers crossed that it doesn't happen. Gentlemen, thank you so much for your time and providing your analysis on some of the highlights that came through from the Minister's midterm budget policy review. A big thank you to both my guests, Muneer Hassan, who's a senior lecturer in taxation at the University of Johannesburg, and Lesiba Mothata, who's a chief economist at Investment Solutions.